If you're considering buying Tesla stock, now may be the time to act, as analysts are predicting that the stock price will quadruple in 2023. Recent reports also suggest that Tesla's stock price will surge past this $1,200 price per share. That's great news for Tesla shareholders and the electric car company as a whole. And it's going to signal monumental growth for the automaker. So, will Tesla soar to $1,200 as they say? Stay tuned until the end of this video to find out. Hey everyone, and welcome back to Everything Tesla Stock. Tesla intends to increase global production of its Model Y and Model 3, its best-selling EVs, significantly in the fourth quarter, and to build on that momentum in 2023 as the newer factories in Austin and Berlin ramp up production. If the forecast for Tesla does come true, then the electric vehicle manufacturer is going to be well on track to meet Elon Musk's target for production in the upcoming quarter, and it's going to put it on par with the German luxury automaker BMW by the end of next year. Its forecast, which covers the following 4 quarters, sets an aggressive goal to produce more than 495,000 Model Y and Model 3 vehicles in the fourth quarter of this year. About 95% of Tesla's production comes from those two models. The production plans are going to see Tesla surpass anticipated growth in the global auto market by almost a factor of 10 in 2023, with a production increase of over 50% for the year. Hopefully this goal can be achieved in spite of lingering supply chain risks, a sluggish economy, increased competition, and declining Tesla order backlogs. According to brokerage Piper Sandler, Tesla is going to deliver 354,000 cars during the third quarter. Citi predicts 369,800 vehicle deliveries, and Troy Teslike anticipated 343,779 Model Y compact crossover and Model 3 sedans to be sold. What does this mean for EV makers like Tesla and its investors? Keep watching to find out. If Tesla meets or exceeds these analysis projections and produces the internal forecast for the upcoming quarter, it will have approximately 1.4 million vehicles sold globally in 2022. Since the fourth quarter of 2018, Tesla's production and deliveries have been incredible, with 1.59 million Model Y and Model 3 units expected to be produced over the first 3 quarters of 2022. If this happens, Tesla's going to be well on track to sell over 2.1 million EVs by the end of next year. That would make it bigger than Volkswagen's brand Audi and approaching BMW's 2.5 million vehicle sales in 2021. The most recent full year of comparable sales if gas-powered car sales are included. However, that output will be slightly there to surpass Wedbush Securities analyst and Ives prediction. Ives has always been bullish on Tesla, and he predicts that 2 million EVs will be delivered in 2023, up from 1.39 million this year. Tesla CEO Elon Musk told analysts in the previous quarter that there was a good chance the company would reach a global production run rate of 40,000 vehicles per week by the end of 2022. According to an internal forecast, Tesla's expected to reach and maintain that production level throughout the first quarter. The forecast also hinges on Tesla's recent factories in Austin, Texas, and Berlin, seeing a significant increase in output. It states that by the end of the third quarter of 2023, Austin would increase production to almost 101,000 vehicles, and by the quarter ending in September 2023, Berlin would experience an equivalent increase from 51,000 to nearly 90,000 EVs. Jörg Steinbach, the regional economy minister at Brandenburg, where Tesla has a factory near Berlin, stated that the plant will be operating on 3 shifts by the end of 2023. Sam Fiorani, vice president of global forecasting at production tracking company Auto Forecast Solutions, AFS, also said that given the fact that Austin and Berlin's plants have been operating below capacity, large increases in output for Tesla shouldn't come as a surprise. He said Berlin and Austin are coming into their own next year, and that's where a lot of this volume is coming from. The Tesla forecast also assumes that production in Shanghai, a mega factory that accounted for more than half of its output in the first half of this year, will level off by the end of next year. Tesla recently increased factory capacity, and according to the automaker, it plans to produce 20,500 vehicles per week for the rest of the year. The projected increase in Tesla's output is also subject to economic risks, which Musk has previously raised. Global growth has slowed significantly, especially in China, the world's largest EV market, where Tesla is competing with fast-growing rivals. In the coming months, the availability of gas to power plants will likely cause uncertainty in German industrial production. While 2 million vehicle deliveries by next year is going to be a huge accomplishment for Tesla, it would only represent a small portion of the company's overall vision. Musk stated at Tesla's annual shareholder meeting that the company hopes to have 10 or 12 factories built by the end of 2030, with the new ones capable of producing 1.5 to 2 million vehicles per year. Musk also added that another location for a factory will be announced later this year. The electric automaker appears to be on track to finish this year with strong momentum in its factories, positioning itself for explosive growth next year. The stock is trading just under $300 at the time of this video, but some analysts predict that the shares could soar over the following 12 months, reaching $360. Tesla's expanding production capacity is a major factor in these bullish predictions. Wedbush Analysis predicts that annual deliveries could soar in the next year, going from fewer than 1 million in 2021 to about 2 million in 2023. Ives raised Wedbush's 12-month price target for Tesla stock from a split-adjusted $333 to $360, citing the company's strong momentum as we approach the end of the year and Tesla's improving production rates at its high-output factory in China. When the Shanghai government restricted factory operations earlier this year as part of its efforts to slow down the spread of the pandemic, Tesla's factory in China experienced significant setbacks. However, the automaker reported in its second quarter update that at the end of the quarter, production rates had not only recovered but were also reaching new record highs. 2 million deliveries in 2023 may start to seem feasible when investors consider this growth potential along with Tesla's continuous growth improvements at its California factory and its production ramp-up at the new factories in Texas and Berlin. After all, Tesla's factories are already equipped to produce more than 1.9 million units annually. Additionally, Tesla's management has not stated that it intends to slow down its investments in raising production capacity. Instead, though, it did disclose that it anticipates using all of its current manufacturing capacity by the end of the year. Musk said during the company's earnings call for the second quarter that Tesla has a good chance of exiting this year at a production rate of 40,000 vehicles per week. Now, here's the interesting part. Cathie Wood, CEO of ARK Invest, had earlier predicted that Tesla shares will be worth at least $3,000 by 2025. That's more than 8 times the current stock price of Tesla, and more than double ARK's own $1,400 price target set this year. According to a note by analysis, Tasha Keeney, even in a bear scenario, ARK believes Tesla shares will reach an absolute low of $1,500 by 2025. Kenny wrote that ARK's price target has shifted significantly from the last year because the firm changed its assumptions about Tesla's ability to efficiently use capital to fund its ambitious growth plans. ARK is now accounting for the profits that Tesla is expected to make from selling car insurance to its consumers in certain states. Kenny also wrote about Musk's promised robotaxi hailing service, noting that ARK now believes that Tesla's got a 50% chance of achieving fully autonomous driving by 2025, and that such a service would add $160 billion in annual profits by this year. No doubt Tesla's projections are subject to risk, and its growth potential may be overly optimistic. Investors are now paying more attention to the risk associated with expanding production of complex commodities like electric vehicles, which requires a global supply chain. These supply chains have recently become more challenging than investors expected, and of course several analysts to cut down their price targets. However, despite the issues, Tesla is clearly executing its plans well. A record-breaking second half and a strong start to 2023, although not certain at this point, may be in view. And who knows, the stock price may potentially quadruple to $1,200 per share in the coming years. Do you think Tesla can reach this stock price anytime soon? Let us know down below. And if you'd like to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.